Dividends are a staple for most Canadians. That's why in this video, we are going to be talking about the 3 top dividend ETFs that are listed on the Toronto Stock Exchange. We'll be breaking down what the performance looks like, what the dividend yields look like, and what are some of the holdings within the ETF. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, huge favor, huge ask. If you learn something new, or you get some value out of the video, hit that like button for me. I definitely appreciate that. And if you haven't already, please consider hitting that subscribe button and turning that notification bell on, especially if you like content like this. We're gonna get started by taking a look at all of the dividend paying ETFs on the Toronto Stock Exchange, more specifically the ETFs that are listed as dividend payers. So we have on this list here what the ticker symbol is. We also have the name, that's the company that lists it, and it gives you a little bit of a description. High dividend yield, Dividend Aristocrats. We're listing what the stock price is, the dividend yield, the MER, which is the management expense. That's what you have to pay this company to own the ETF. And we're also going to show what the total is after you've paid your MER, your dividend minus your MER, and then what the year-to-date performance is. Now, first things first, past performance is not an indicator of future performance, and we'll take that into account right now. But I think what is important to note is that there is so many, it would be such a long video for us to go line by line. So I'm gonna pull out which ones look most interesting to me, and obviously make sure to do your own due diligence to see what fits your investing criteria. So we take a look at, we have different Vanguard products here, iShares, BMO, TD. There's a bunch of products that are listed on here with varying stock prices. We've covered in the past that stock price doesn't particularly matter in this case, but we will look at some of the dividend yields, and we can see that they trend anywhere between high 3% all the way up to about 4.25%, 4.5%. And when we look at how some of these companies have performed over the past year, we can see that they all perform relatively the same. 0 to 2%, and then you have your outliers. You have your -7, and then you have your +5. So the ones that probably look most interesting to me is if I look at all of them in a chart together, which I'll show here on Yahoo Finance, to see how they performed over the past 5 years. Let's get a little bit more data in there. Let's see how they performed over a longer period of time. So I know it probably looks relatively small, but we're going to break it down and try and make it as easy as possible. And we can see that there are some that are standout performers. The first one being HAL, which is the Horizons product. And then we also have VDY, which is the Vanguard product. So we'll take a look at those in a little bit. But first, I want to start with something that may be a little bit more for the conservative investor, and we'll go back quickly here to the Excel, and that is the iShares S&P Canadian Dividend Aristocrat. So let's learn a little bit more about what it takes to be in this fund. Ticker symbol CDZ.TO on the Toronto Stock Exchange is a diversified exposure to a portfolio of high quality Canadian dividend paying companies, and it screens for large established Canadian companies that have paid cash dividends every year for at least 5 consecutive years, and it's paid monthly. So the interesting part about the Dividend Aristocrat is that you traditionally look for companies that consistently pay dividends, and this may be a little bit more beneficial or something that fits better into somebody's portfolio that needs monthly income and needs that consistency and needs a little bit of assurance that those dividends are going to get paid. We have here the average annual over the past 5 years has been about 6.63%. And when we look a little bit further, we can see what's actually held in this fund. So we'll scroll down here and we can see that it's got some interesting companies. You have real estate, you have energy, utilities, financials, industrials. Some companies may already be in your portfolio, so I would be doing your own due diligence to see, hey, do I already own enough of this? Am I owning too much of it? But I will tell you, with this one particularly, it does differentiate itself with a lot of other ones that were listed on the Excel spreadsheet. Slate Grocery, Enbridge, Capital Corp. These are names that aren't really showing on the other ones. That's why I thought I would throw it out here, especially since these companies are consistent with the dividend, and if you need that dividend income, this is definitely one to take a look at. But when we talk about this one in its entirety, the performance is nowhere close to some of the others that we're about to cover. So the next one is Horizons, and this one is the Horizons Active Canadian Dividend ETF. And this was one of the better performers, not only this year, but just in general. So we can see here what are its key features. So they want to basically deliver long-term total returns. So not only dividend, but also in long-term capital growth. So they're looking for companies that are not only increasing the dividend, but also increasing their worth, having that stock price or share price grow. So they have a stock selection process that targets dividend stocks that offer a combination of dividend growth, payout, and sustainability. They diversify, and it aims to outperform a passive indexing strategy. So this one may be better for those that are looking for a little bit more growth, but also getting some income in the interim. When we take a look at what the estimated annualized yield on here, it shows 5.71. This video is being recorded as of December 11th, so definitely take that into consideration. We will then move on to what is it holding. So it does break down the sector allocation here: energy, financials, real estate, industrials. We can break down here to see all of the other considerations that are in there, but let's take a look at what the top 10 holdings are. So you have the top two are Canadian financials, staple to everybody, should be pretty much in everybody's portfolio. Then you start to get into Ovinativ. I don't know if I pronounced that correctly, but that's an oil company. TELUS, Freehold, another oil-based company, Arc Oil. And this one's definitely interesting because it does differentiate itself with what the traditional norm is in all of those ones that I listed before. They kind of have a similar makeup. This one is definitely a little bit different. And when we talk about the similar makeup, we're going to get into the Vanguard product, which we showed before did perform relatively well over the past 5 years. And you'll get an understanding once we go through it as to what the general portfolio looks like. So we see here Vanguard is a Canadian high dividend yield ETF that seeks to track, to the extent reasonably possible before fees and expenses, the performance of the broad Canadian index that measures the investment return of common stocks to Canadian companies that are characterized by high dividend yield. So they're looking at what are all the high Canadian dividend paying yield companies doing in Canada. Can we match their performance? So when we look at the performance over an annualized basis, we can see the 5-year is pulling in about 9% year over year. As we continue to move back, 10-year basis, it's doing 9%. So this is definitely the best one when you talk about the general Canadian dividend paying ETFs. I think Vanguard is the safe play. The MER is not too bad, but let's see what's in the portfolio to get an indication of just what every single other one looks like. And I would definitely suggest and highlight to you that you should be going through and taking a look at all of them and see what fits best for you. So again, we can see what's broken down. Financials playing 54%, a majority there. Energy, telecom, utilities, we've seen it all. So again, Royal Bank, Toronto Dominion, again, the two staples that are in your portfolio. Then you have Enbridge, CNQ, you get a little bit of oil play there. Then you get banks and pipelines and telecom. And this one is traditionally what most Canadian portfolios do look like. But again, a top performer when you take a look at all of them into context. We'll leave up on the screen right now just so that you can take a look and see some of the other ETF tickers to go and do your own homework. See what the past performance is, see what they're holding. Do you already hold those companies? You don't want to be overexposed or have too much of it in your portfolio. And then this is obviously if you want that dividend income. For me personally, I am in XDV, but I have learned my lesson after doing this research that I am going to go and switch it up. It's either VDY or HAL for me. And I'm going to be making this move when the market seems right. It definitely showed to me that XDV is not the best player in the game. But you always have to be researching, always have to stay on top of your game, make sure that you have the right stuff in your portfolio. But let me know down below, did I miss a particular ETF that is a Canadian dividend paying ETF? Let me know down below in the comments. Let me know which one suits your needs best. And I hope you all have a great week in the markets. Happy trading.